Hello everyone. Thank you for joining me today for this webinar that's going to focus on the specific needs that platforms have when it comes to payments and how end-to-end services like ours, MangoPay, are coping with the constantly evolving payment landscape. So the payment industry has and is continuing to go through a wave of changes. We've been witnessing the entry of a diverse range of providers aiming to provide solutions for a wide range of needs. From established businesses such as Facebook with the recent launch of Facebook Pay, to startups that are presenting increased competition to established banks and increased availability of financial products. Consumers are increasingly connected to the internet through widespread use of smartphones, tablets, and laptops. This constant connection is increasing consumer expectations on how platforms should manage payments and manage their funds. The emergence of new products and technology is allowing for a wide range of innovation in payments. This innovation and disruption is visible and accelerating, and this disruption needs to be embraced to ensure that businesses are not negatively impacted by the changes happening now and the changes to come. Today we will be looking into the disruption being experienced within the payment ecosystem and how this affects platforms. In order to understand how things are changing, we will first look into the history of payments in order to understand how payments have changed to get us to the stage we are at now. We will then look into the effect that changing consumer habits are having on the payment innovation and how platforms manage their payments. Lastly, we'll look into the future. At a time where disruption is happening at all stages of the payment flow, the future of platform payments currently provides an environment full of exciting opportunities. As we go through the presentation today, please feel free to ask questions. I will go through all the questions at the end of the presentation, so do feel free to be as involved as possible and send your questions over to me. So firstly, to explain a bit more about MangoPay and how we support platforms. We provide a flexible payment solution for platforms, marketplaces, crowdfunding sites, and fintech solutions. Our solution allows platforms to provide their users with a unified end-to-end payment solution. For platforms, the importance of payments is not just how users can pay for goods and services, but there is also significant importance for how their users can receive funds and how these funds are managed. Our solution enables platforms to manage both ends of the payment process for their customers through one simple API integration. We provide a white-labeled API solution, providing each platform with the ability to uniquely customize their integration and payment flow in a way that meets the needs of both their users and their business. Through the use of our segregated client money account, we ensure that funds are secure and guaranteed by holding all funds within our escrow account. Platform payments require a different approach than traditional e-commerce due to the handling of client money. Our solution allows for platforms to remain compliant while managing the payment flow. We focus on the payments so that platforms can focus on their business. In order to provide a clearer picture on what platforms are, these are some examples of some of our clients. Platforms range from marketplaces such as Chrono24 that allow users to buy and sell luxury watches, fintech solutions such as OverMoney that help users to save and invest their funds, to crowdfunding sites such as the House Crowd that allow a mix of institutional and private investors to invest funds into property development projects. The common theme about platforms is that the money does not belong to the website. In each case, the money is allocated for the buyer and seller, the saver, or the investor and borrower. This concept of client money means platforms need to handle the funds in a specific manner, and payment solutions such as ours allow for companies to achieve this. So the current payment sphere is of a very complex nature. There are a large number of companies that all offer payment services focusing on different needs and niches. However, the payment industry has not always been as complex as it is today, and that complexity is still evolving. A lot of the most impactful changes to payments have happened in the last few decades with a direct link to the rise of the internet. As a race, humanity has always engaged in commerce, but payment for exchanges of goods and services has not always been managed in the same way as it is today. The evolution of technology and the establishment of money have provided an environment that has allowed payments to develop drastically. Our current infrastructure and processing ability allows for payments to occur essentially at any place and any time. So let's have a look into some of the most pivotal changes in the history of payments to understand how these have impacted how we view and manage payments today. In 1816, England established the gold standard as the backing system for the pound sterling, meaning the value of a currency was established by the value in gold. Both the US and Europe then followed in using the system. Now, whilst the gold standard was accepted for around a century, it's no longer in use. And this is a good example to show that changes in payments are not permanent. Methodologies and trends that are in place now have no assurity of being in use in the future as developments occur, really highlighting the importance for platforms to keep on the trends of development. You need to understand what's in place now and what's to come in future. In 1871, Western Union, which is now established as one of the largest money transferring services globally, launched the first wire transfer via their telegraph network. As the telephone began to replace the telegram as a method of choice for communication, Western Union used this disruption in the communication industry to realign their business focus to money transfers, showing how even in the 19th century, disruption in how consumers were communicating was already allowing for innovation in how payments were managed. The next big change is the dawn of credit cards. In the 20th century, the first cards were issued, allowing for consumers to make in-store purchases. This was then followed by the invention of the magnetic strip to allow cards to be read electronically and the issuance of debit cards. These developments are all putting the payment industry in a good position for the rise of internet shopping in the 1990s. This now brings us into the online payment era, an era of many changes in payment services, access to payments, and how consumers can spend. The first online transaction was made in 1994. It's also worth noting that the first mobile payments were made in 1997 when Coca-Cola allowed for payments to be made via text message. In 1998, PayPal then launched as a money transfer service and has now become one of the most established players in the payment industry. 1998 was also the first year where in the UK, debit card payments exceeded the use of personal checks. And this is a trend we are continuing to see as payments become more and more digital, with recently debit card transactions having overtaken cash in the last few years. The 21st century then saw the emergence of more payment companies and more services with the aim of making payments more accessible for both merchants and platforms. Google Checkout launched in 2006 with the aim of simplifying how goods are paid for. Then in 2010, both Stripe and Square launched, firstly as a way to make mobile terminals more accessible for merchants, but both these businesses have developed to offer more services as payments have changed. In 2014, we then see the launch of Apple Pay, putting things in a good position for the rise of mobile payments. If history has shown us anything, is that the payment industry has been continually changing and will continue to do so. The way consumers spend is also continually changing, from the usage of check to cash to cards and now the use of smartphones. Disruption is not a new idea. It's always been a part of history and a part of payments. The key is how platforms embrace the disruption that has happened and the disruption to come. So we've seen that change has been key in the past in order to develop the payment ecosystem that we enjoy today. But why is that disruption still important? Firstly, let's consider our day-to-day lives. The way in which we interact and socialize is continually changing through the invention of new technologies. These changes are driving change all across aspects of life, and payments are not excluded from this. As the lives of consumers change, payments need to change to ensure they keep up to date with consumer habits. More and more interactions are becoming more mobile and more social. With the rise of social media usage, people are spending more and more time online, especially with the rise in the usage of smartphones amongst the newer generations. If smartphones are where consumers are spending the majority of their time, disruption is needed in payments to ensure that consumers can pay easily and quickly from all things via their phones. Now, the lives of consumers are not just being disrupted from how we interact, but also from expectations. The digital age means that consumers are used to convenience. Information and resources are all available at the click of the button. Same day, next day delivery service have all become the norm, and payments should also reflect these ideals. We live in a day and age where transactions have been getting quicker, but disruption is still needed to improve speed and transparency. So let's take a few examples. Refunds. Consumers are still frustrated over the fact that a payment can be taken instantly, but a refund is not returned with that same speed and efficiency. Disruption is needed to modernize payment infrastructure to meet the standards that consumers want. Cross-border payments and transfers are notorious for inefficiencies, lack of transparency, lack of tracking, slow processing times. Disruption is still needed to get these cross-border payments in line with the standards that we see in local bank transfers, such as with the Faster Payment Network. The digital revolution is still ongoing. Consumers expect payments to be fast and convenient. The disappearance of old ways such as paper-based payments and the emergence of other methods of payment, such as through the use of biometrics, is expected to keep up with the digital revolution. So disruption is all around us and affects consumer expectations. And so disruption is still needed in payments to ensure expectations of our consumers are met. Platforms who do not embrace this, they risk alienating and losing their customer base because they're not receiving a level of service that they find acceptable. The way we conduct commerce has also changed. A rise in online platforms means more and more transactions are done digitally. With closures in high street stores and the rise of online stores such as ASOS, we can see that commerce is being conducted differently now than in the past. In the future, we will also see the rise of social commerce, enabling purchases within social media apps for P2P payments and also to allow users to buy directly from brands. As the way we choose to make purchases changes, so does the way payments are managed need to change. The focus of a mobile front end for payments will become more and more important. As we can see, there is disruption occurring all around us. And disruption is fundamentally a change, important changes that define a shift in the way we pay. This disruption is important and is beneficial, as the purpose of disruption is to improve inefficiencies. But it's essential to note that not all change paves the way for disruption. But whilst we can understand that it's important to make changes, what does this change actually mean for platforms? Platforms need to be ready to embrace permanent changes that reflect the changes in how commerce is conducted and the changes in consumer expectations. Disruptions means platforms need to be agile enough to ensure that they keep their payment flow and available methods of payment for consumers updated to reflect advancements and needs. There are various trends that are impacting payment disruption, and platforms need to be aware of these trends. From open technology such as open banking with the introduction of AISP and PISP services, platforms need to consider how they can utilize these open technologies, not just to enhance their payment offering, but to enhance the services that they provide. Speed and transparency are becoming more and more prevalent as a trend. Platforms need to ensure that they're using solutions that are embracing this, using advances such as the Faster Payments Network, SEPA Instant Credit, Swift GPA trackers. Technology is continually evolving to adopt schemes that encourage speed and visibility. Globalization and localization, we're becoming more and more global with where we purchase from. Borders are no longer a barrier for consumers. But at the same time, platforms need to ensure that they are becoming more local and focusing on the correct trends. So whilst advancements like cryptocurrencies are currently one of the most talked about disruptors in payments, platforms really need to focus on what their consumers actually want. And in an age where consumers are happy to purchase goods from platforms based outside of their home country, becoming more local by offering local methods of payments and local currencies can be more important for consumers than offering payments with Bitcoin or Ethereum. So there's a lot of change and a lot of disruption occurring in payments, but platforms really need to focus their attention on the changes that their specific consumers and users actually want and need. So with all these changes in how consumers pay, platforms need to be aware of permanent changes aimed at payment-related aspects such as regulation and authentication, or permanent changes that are transforming digital commerce. So digital commerce is rapidly transforming, and there are, in my opinion, three main factors that I personally believe are contributing to the change: friction, regulation, and personalization. Consumers want their experience on platforms to be frictionless, And with the rise of fraud on digital payments, governments and financial authorities are ramping up the associated regulation to give more power back to consumers. Consumers also want experiences to be personalized, meaning that the data collected and how that data is used is becoming more and more important to the user experience on platforms. A frictionless experience for users is key to increasing conversion rates on platforms. The future of payments and both digital commerce will need to be driven by mobile front ends. Platforms need to ensure that they're ready for these changes. And when it comes to mobile-first payments, platforms need to ensure they're working with providers who will embrace this, especially mobile payments that are popular in different regions they work with. Google Pay and Apple Pay are always the examples used, but they're not the only online mobile payments that can manage this. There's been a large rise in e-wallet payment services such as WeChat, and that shows demand and adoption of mobile-driven payments is on the rise. However, the adoption of a mobile-first mentality should not ignore the current status quo. For consumers, and something that platforms need to be aware of, is the transition between mobile and browser-based payments. A percentage of the population will, for example, browse on a platform on their mobile phone during their commute to work, but then they purchase their goods on the computer. Platforms need to ensure they have a seamless experience for any situation, ready for mobile payments for consumers who wish to pay via their phone, but also ensure they're not removing existing payment methods and browser-focused flows, which could risk alienating users. A frictionless experience also means the expectation of real-time payments. These are both for consumers who are paying for goods and the service providers or vendors who are expecting to receive funds. Whilst a lot has been done on the pay side, the reception of funds via wire transfers, and especially when it comes to cross-border payments, is something where a lot of innovation is coming. Now, I'm based in the UK, and we are really lucky and probably take for granted the speed and reliability of transfers managed on the Faster Payments network. But the other global network schemes are not yet at the same stage. So SEPA Instant Credit Transfers is a pan-European scheme for rapid payments that is not impacted by borders within the SEPA region. With currently 51% of PSPs across 22 countries having already joined, adoption has been slow, but it's starting to become part of the payment infrastructure and is something platforms need to be adopting. So unfortunately, there is still some work to go with international transfers. For example, the use of intermediary banks, as not all banks are connected, can create delays and also a lack of transparency when needing to receive funds. Platforms can even work with current providers, such as using the SWIFT network to manage these payments. But in an evolving industry, more methods are appearing in order to improve the speeds of receiving funds, especially for cross-border payments. If we look at the Visa Direct Money Transfer service, which is built on the OCT rails, this is allowing for funds to be received in real time, and is something platforms should be looking into as a way to improve receiving experience for international transfers. Something that is aiming to make sending payments as easy as it is for acquirers to debit them. The transformation of digital commerce in present day means using established players, but also looking at innovative solutions, what they are offering, and whether or not these can be of benefit for the platform users. Now, these changes are largely affected by adoption. And sadly, changes in payments are not adopted by consumers as fast as innovation in other industries. But that does not mean that platforms should not be prepared. So with the rise of digital commerce comes the need for improvements in data and regulation. Data improvements are needed for platforms to better understand consumer behavior, which will directly affect understanding how they should be paying. As payments are not just about payment methods, but everything from the user experience to how the checkout form looks to any add-ons the platform introduces when the user is paying for their basket. To understand the effects of all this data, data is needed to understand consumer behavior and correctly make changes. All this data then helps to manage the personalization of a platform for specific users, something that, in my opinion, Amazon really does not do well. But from information about things such as last purchases, what time a user browses, what time a user pays, how often a user returns, all this is a great source of information to allow platforms to really personalize each user's payment experience. For example, users who tend to make large purchases and do mass returns, suggesting buy now, pay later solutions as payment methods can really help to retain those users and offer them a better suited payment method. There is also the regulatory side, and to an extent, the changes in regulatory obligations are really forcing the drive in payment disruption. From the Payment Services Directive, where the aim is to promote innovation and enhance consumer protection for online payments, with links into SCA, and how not just platforms, but also the card issuers have to then think of ways to enable payment authentication, or whilst not disrupting the user experience on their platform. To the regulation behind open banking, which is a government-led change specifically aimed at bringing more innovation to financial services. Enabling PISPs to manage bank-to-bank payments, but unfortunately, the adoption of open banking has been slower than parties originally expected, and this adoption trend can have a negative impact on innovation in payments. If platforms are not embracing and adopting changes, consumers will be unaware of the new opportunities available for them to pay with. And in a lot of these cases, the adoption of these new innovations can provide clients with faster, more secure, and a cheaper way to manage their payments. So whilst this disruption is happening, are consumers beginning to adopt some of these changes? Unfortunately, as I mentioned, payment change adoption is slower than in other industries. As a race, we get comfortable. We get comfortable with a set method of payment, and it becomes harder and harder to change the habits of how we want to pay. But that does not mean it's not key for platforms to adopt changes that are present. We can't predict the speed at which consumers will adopt change, and so platforms need to be prepared. They need to be prepared in advance to ensure they're ready for what they think the next trend will be for their users. And as consumer habits change, we'll start to see the adoption of new innovations in how people want to pay. We're currently seeing the rise of social commerce, enabling users to make payments directly from their social media applications, to the rise of re-commerce, buying and selling in a P2P marketplace. This rise in consumer-to-consumer purchases may see the rise of payment transfer solutions based on phone numbers, for example. Something that's been around for a while with solutions such as Pingit, but again shows how adoption of different payment methods can take a while to become the norm. So with all these changes in payments, from how we pay to visibility and security surrounding transactions, platforms need to ensure that they are embracing these changes. Platforms themselves are disruptors. If we take a look at Airbnb, a rental platform that has completely disrupted the hotel industry, and then services such as Uber and Deliveroo, platforms that are both disrupting their respective industries. Platforms are disruptors, and as disruptors, they should always be looking out for new innovations that can positively affect their users' experience on their platforms. So as mentioned earlier, in my opinion, the future is mobile for platforms. Platforms need to embrace the change towards more mobile-focused experiences, and so change their payment experience to reflect this. Enabling wallet payment features are a start to doing this, as well as enabling in-app payments, but also ensuring simple ways to connect and use cards. With these in-app payments comes managing authentication, and platforms need to consider the best way to handle this. We also have bank-to-bank services, wallet technologies, and they're super beneficial because they have authentication methods already inbuilt. But then when it comes to authentication, platforms need to consider how are they going to do it in a way where users will continue to pay without any disruption. So considering the use of biometrics, 3DS in their user flow, that can really help to seamlessly authenticate payments, both in-app and on the web. Then we have regulatory changes. These changes are here mainly to enforce consumer protection. And the SCA changes have been met with some hostility by merchants and platforms due to concerns of how it will affect the payment flow. But these regulatory changes are here to improve the experience and protection of payments. What platforms need to do is embrace that and work on readjusting payment flows within these new requirements in order to make it better for their users. And lastly, the most important thing I think platforms can do to show that they're embracing change is through setting the standard of adoption. The more platforms we have that use payment methods such as direct debit, Visa Direct, bank-to-bank methods, buy now, pay later solutions, all of this adoption of change will aid in consumers accepting the change. And if we look at solutions such as Klarna, Buy Now, Pay Later, and their partnerships with brands such as Gymshark and ASOS, this is a really good example to highlight how platforms that influence standards by adopting new payment methods, they will set the standards of how consumers should pay. So what can we expect from the payment industry in the future? I believe and hope that there will continue to be disruption. Regulatory changes will continue to be apparent, and with the increase in online payments, there is also the increase of risk and fraud and more sophisticated methods of fraud. Governments and authorities will continue to work on how consumers can be protected, and so there will continue to be changes in how authentication should be conducted. But this will also link into the rise of and uptake of escrow solutions, solutions that will safeguard and segregate client money. For platforms specifically, escrow solutions, in my belief, in future will be key. With regulatory changes to the definition of payment services, platforms need escrow solutions such as ours, not only to be compliant, but to add an additional level of security of how funds are managed and insured. There will also be an increase in the adoption and improvement of fraud prevention and chargeback management tools. You can see now that platforms such as Riskified, which are growing and getting mass amounts of investment into them, are continuing to work on their techniques and use of AI and machine learning in order to help platforms to combat and protect themselves from online fraud. With the rise of online payments, the future of payment innovation will not just be on how to protect consumers, but also how to protect platforms. We have fast payments and real-time reconciliation. As I mentioned, we're becoming more and more global, more digital, and more used to convenience. Banking infrastructure will need to be updated to reflect this, and if not, new challenges will come in to manage this. I also see disruption in how we pay, with payment methods evolving to be more and more industry-specific. Card will not always be king. Instant reconciliation of bank transfers will be more prominent, and in the use for B2B businesses such as service provider marketplaces, things like direct debit will become more prominent. The use of e-wallets will become more prevalent for C2C marketplaces, especially as they provide the convenience of inbuilt authentication and a fast way to pay that easily integrates with a mobile experience. All these changes are coming and highlight the importance of payment solutions for platforms. Platforms can't embrace this disruption if their providers are not doing the same. Payment solutions need to ensure that they understand the changes happening in the regulatory sphere before they come into place. This ranges from regulatory changes such as PSD2 to AML5. It should be the responsibility of solutions to understand these changes, implement anything required, and communicate to platforms what the changes mean for them and how they can embrace the changes to improve the offering. Payment solutions need to understand innovation before it becomes a trend. This means truly understanding the hype circle, to be able to filter through which innovations are not just cool, but what innovations are going to benefit the platforms each solution is targeting and works with. The tricky part with this is choosing what payment methods to focus on before they become a trend. There are so many solutions across the globe and so many solutions being thought up on and created that payment solutions such as ours really need to understand our target market in terms of our platforms, their users, and hone in on specific methods that will benefit our clients. Solutions need to understand the ever-increasing importance of mobile, offering payment methods that will work well in-app, and they need payment solutions that are overall happy to adopt change. Just like with the banking services, if you're not happy to adopt change, new players will come about providing the changes that consumers want. Payment solutions are not exempt from this. We need to embrace and be happy to adopt new changes. Some payment methods that are implemented may eventually die out, but providing the options at the time is key, so platforms and their users can use all of these information and all of the methods available to them and see what works for them and what should change. So where does MangoPay come into this? And what are we doing to help drive disruption and help drive adoption of new innovations? For us, Firstly, collaboration is key to innovation. As much as solution providers can like to think you can achieve everything on your own, there are a lot of instances where we can't. But there are other service providers who can help. Collaboration can be key to achieving innovation. For us, this means working with other solution providers to achieve our goals and our visions. For example, looking at PISP solutions to help us provide open banking solutions to our clients, working with solution providers to help with some of our unique offerings, such as the linking of bank accounts to wallets to allow for automatic reconciliation of bank transfers. As a solution provider, we do not see collaboration as a weakness. It is a key to progression and innovation. We are constantly aware of the need to be prepared. Preparation is key to ensure that we're not being disrupted, but are the disruptors. Without understanding the new innovations happening in payments and the new solutions coming out, solutions are asking to be disrupted. Preparation means we're not being reactive at the last minute for change, but are proactively planning and managing changes in advance. Lastly, as a solution, we need to ensure our clients that we are meeting the needs of both them and their users. Part of this is not getting distracted by some of the many changes happening in payments. The payments ecosystem encompasses a large range of solutions and methodologies, and we need to focus on what will impact our clients. For example, changes to point-of-sale solutions are not what our digital clients are interested in. Changes in cryptocurrencies are not what our clients are interested in. In order to drive disruption, we need to understand what consumers want when purchasing from platforms, what vendors want with how they need to be paid, and how our clients would ideally like to manage their payments. Disruption is continually happening, payments are continually evolving, and as a solution, we need to be at the forefront of adoption so our clients can also adopt those changes. So just to end on a final note, I think any platforms in the future, any service providers, the key to remember is to adopt disruption in order to embrace change. Thank you very much.